Hello again, everyone. How are you all doing out there? I'm Kate Hill, bringing you, I hope, the best and unbiased, honest content on property, along with some fantastic hints and tips. So today, stay tuned to hear how to thrive as a property investor in times of uncertainty. Australia's recent federal election has, as is very often the case, put a very temporary pause on decision making for many would-be property investors. It's not uncommon. When political power hangs in the balance, people often delay big financial moves, especially investments involving hundreds of thousands of dollars. But while uncertainty may feel like a signal to wait and see, it can actually be one of the more and most strategic times to act, provided you're informed, prepared, and thinking long term. So why do elections stall property investment decisions? Election cycles are notorious for casting a temporary shadow over the property market. Buyers wonder if housing policies may change. Investors anticipate alterations to negative gearing, capital gains tax, lending environments. All these unknowns make people cautious, and understandably so. But I think it is worth remembering that property investment is rarely about what happens in a single month or quarter. It is about what happens over 5, 10, 15 years. Volatility in property doesn't always look like the stock market's sharp dips and spikes, but uncertainty still causes ripple effects, slower sales, extended days on market, and slight softening in prices. Some investors see this as a warning. Others, the successful ones, see it as an opportunity. Emotional reactions to market changes are natural, especially during unpredictable times. But letting fear drive your strategy can result in missed opportunities and short-sighted decision-making. Real estate isn't about timing the market perfectly. You do need to time it to some extent, of course. You don't want to buy right at the top of the cycle. But it is, as we all know, time in the market that really matters. That philosophy becomes even more powerful when everyone else is hesitating. So what are some of those key strategies for navigating uncertainty as a property investor? Here's how savvy investors stay on track and even thrive when confidence in the market wavers. Always maintain a long-term view. Don't let short-term noise distract you from long-term goals. I can't tell you how important this is. History shows us time and again that Australian property has consistently delivered strong returns over time, even after economic shocks, interest rate hikes, policy changes. Ask yourself, will this short-term uncertainty matter in 2035? If the answer is no, stay on the course. Identify opportunity in slower markets. Elections can lead to brief drops in buyer competition, fewer people inspecting properties, fewer offers being made, and very often sellers who are ready to negotiate. This makes post-election periods a really good time to secure property at more favourable terms, especially in growth locations where long-term fundamentals remain strong. Diversify your property portfolio. Uncertain times highlight the importance of not putting all your eggs in one basket, and generally I mean location by that. If you've been focused on one type of property, like established homes in metro areas, consider other asset types like townhouses, maybe regional cities with infrastructure growth, even new builds that offer really good, strong depreciation and yield benefits. Diversification provides insulation against localized downturns and policy risk. Consistently review your goals and risk tolerance. Use this time to reassess your portfolio. Are you overly exposed to one market? Are your cash flows protected in a higher interest rate environment? Do your properties align with your retirement or passive income goals? A regular check-in with your financial and property strategy is crucial. Periods of uncertainty are the perfect prompt. Also, again, I can't tell you how important this is. Get advice from the experts, not the headlines. Instead of reacting to the latest news cycle or sensational media headlines, Work with experienced property professionals who understand market dynamics and investor psychology. A trusted advisor can help you cut through the noise, identify genuine opportunities tailored to your situation. So post-election, what has actually changed? With the election behind us now, it's time to look at the road ahead. If no major policies that we know of around property have shifted, or if proposed changes are likely to take years to implement, then sitting on the sidelines out of fear might no longer serve your best interests. In fact, post-election periods, again, like I said, bring often that rebound of buyer and investor activity. Waiting too long could mean you are competing with everyone else who has also delayed, and you are missing today's negotiation power. Uncertainty can be a catalyst. Really smart investors don't just survive uncertain markets, they thrive in them. The key is to reframe uncertainty not as a threat, but as a signal. It's a signal to act strategically. Double down on research. Review your long-term goals, and to take advantage of slower conditions while others are still hesitating. In the world of property investment, there's rarely a perfect time to buy, but there is a better informed time. Post-election periods, while uncertain, can also bring clarity and fresh momentum. The Australian property market has proven time and again that those who act with conviction, supported by facts and good guidance, are the ones who come out ahead. If you have been sitting on the fence, now could be exactly the right time to revisit your investment goals and re-engage before the rest of the market catches up, particularly because we've just had another drop in interest rates. I will keep you posted on all things property from around Australia. Don't forget to hit like and subscribe if you are enjoying all the free content, and I will see you soon. Bye.